Finding the right buyer. A little factoid. Most of the time, strategic buyers will pay a higher multiple than financial buyers. I say most of the time because that's not always the case. Know that you've got many different buyer types. You've got your family members. You've got management. You may have a really good close friend that wants to buy your business. Management team stories. If you think your management team would love to be an owner in your business, those are really valuable stories to take to the market because institutional money, private equity group and mezzanine investors, they love to back management teams and buy in their companies. Beware of time wasters, tire kickers, and retreaders. We'll typically get somewhere around 80 prospective inquiries on an engagement. We try to knock that 80 down to the top 10 to 12, and then we'll cut the top 10 to 12 down to 5 or 6. So the final group that gets to bid on your business is going to be to 5 to 6 out of 80 initial guys. With regards to strategic buyers, why will they pay more? Because you fit into their strategic plan for a footprint expansion. They want to, get more geographic coverage. You could have a business model that lends itself well to cost cutting, and I say that because not all of them do. It's not uncommon that there's not huge cost savings. Sometimes there are. It's scalable with existing infrastructure. You may only be running at 50% capacity of your manufacturing plant. They may have some built-in sales. Right away they can acquire your business, get up to 80 or 90% production. There's a complementary capability. I'm aware of a company that just bought another one where the one company was great on customer delivery and customer satisfaction. The company that they acquired was known for just a phenomenal sales and marketing engine, and they could bring in new customers. Both of those got together because of how they could really complement the other. Product adds life. I know that Microsoft bought a large voice-over IP company that they could then integrate that voice-over IP capability into other components of the Microsoft software suite, so you had a nice product that added life to another core product. And then a complementary, it's a complementary product. So you're going to help us build out our product line in this area. I may be a tool distributor, and if I buy your company, I get 3 or 4 other tool lines that I can now distribute. Financial buyers. When would a financial buyer pay more for your business than a strategic buyer? Typically, if they have invested in your kind of business before and they've been successful, know that they still will look at net present value and future cash flows and industry multiples. And then financial buyers will discount more for the valuation dingers. They don't have a platform that can support more of the risk if they paid too much for the business. So if they have experience, you'll see that they'll pay more. If it's easy to scale the business organically, they will often pay more. And I say that because the strategic buyer, they could just go ahead and grow organically instead of paying up for another company. And then if it's initially capital intensive to start the business from scratch, again, a strategic buyer already made that investment and they don't need to reinvest in that again where a financial buyer would pay up.